All righty, welcome everyone. Welcome to the Hurley Investments Market View Commentary for the 16th of October. As most of you probably already know from Kiev, my family went through a little bit of trauma. And with that, it causes me to reflect on life a little bit differently. It causes me to look at how I'm doing things a little bit differently. And I'm going to talk a little bit today about understanding the market and timing. If I was going to ask you, and I'd like you all to type in an answer, yes or no, will our bearish trend continue in October or will it be positive? So Dave, we already had this conversation. So you said yes. Dave, I want to know why you think it's going to continue to be bearish in October. How about the rest of you? Will this trend market continue to be bearish in October or not? Jim thinks it's going to be positive. So, Jim, give me a reason that you think it's going to be positive. Mary, you think it's going to be positive. I'd like a reason why you think it's going to be positive. Abraham, you always are talking and so forth. Bill, you as well. So, our market going to be positive, bearish, or bullish in October? And give me a reason why. So Mary just made the comment. I think the market will be positive because we already know that we're going to deal with a rate hike in November or December. I think it's probably going to come in November, Mary, but we've already known we're going to have rate hikes in the past. And usually when we get a rate hike, the market reacts bearish. I mean, if you take a look at what it did in September, I would just think that rate hikes have scared the market quite a bit, and September I want to blame on rate hikes, but in all honesty, it's probably not that. It probably in September was just cyclical. The cyclical sense is that hey, it's going to be it's going to be that way for that type of month. That's just what I'm going. That's what I would assume. That's what it's going. That's why it's going to be that way. Let's just put it that way. So that would be my explanation on the rate hikes, right? Our last rate hike was actually not September, it was July. So as much as I want to put the rate hike on the fall of September, we can't. That was just the business cycle for the market. Russ said bearish till Israel settles down and the speaker is chosen. So we're now using the Speaker of the House, which will probably be Jordan, right? And he's a stickler. He's not one that I think will play nice. So that might continue the bearish movement, right? Abraham says, looking at the SPY graph, my prediction is higher, but not sure why. All right, Jim Kohler. World situation, government spending will become more positive, create support for the parties in power for the next election. I think growth will not be much though. So Jim, I mean, that's good thinking, right? The only thing that I would see that would reverse our bearish trend, so will the bearish market continue in October? I would answer probably, but earnings might turn it around. And earnings are still set pretty low. We do have a low expectation of earnings. In fact, on the S&P, we have a slightly negative growth to our earnings cycle here. So earnings don't even have to beat and they can still be slightly down for the S&P as a whole, and we could see our market continuing to go up. So here's the catch, right? Let's talk about market and timing. Out of curiosity, is there anyone here that feels like they can time the market? And I'm going to first put this in here on a daily basis. What do you think? Can you time the market on a daily basis? So Mary and I go back and forth. Mary says yes. So I'm going to ask you, Mary, what will the market do tomorrow? And we're going to test you. What will the market do tomorrow? I'm taking a quick look right now, and futures are up slightly. So I know you like using the nighttime futures. Yep. So Mary thinks the stock market's going to be up tomorrow. Yet, Mary, did you place any trades for an up stock market tomorrow? I see. Do you mean on a daily graph, not on a daily basis? Got that. Predicting the next day move. Probably not. Really hard to predict. So Mary, so here's what I'm going to say. You think you can predict the next day move, but you weren't willing to place any trades or any money on it. You didn't buy anything bullish on the S&P 500. You didn't. And if I'm wrong, you can correct me. You just told me no, you didn't put any trades on today. So you feel you can predict it, but you're not willing to put your money where your mouth is. And that's kind of tough to do. I can't get away with this in my business. Plain and simple, I can't get away with it in my business, period. I'd lose a couple times, people's accounts would be down 30% in 3 days, and then I'm toast. How about if I sit on a weekly basis? And Mary, I'm assuming you're going to say yes to all these, so I understand that. Anyone think they can predict the market on a weekly basis? All right, Dave and David, you've got it. I would agree with you. I'm not a fan of a weekly basis. What if I gave you a little more time? What if I told you a monthly basis? Now that we have cycles, is there anyone here that thinks we can outguess the market or predict the market on a monthly basis? Bill, I'm going to read that one. So Bill, let me know. I predict it will go up or down. But what if it's flat? What if it's sideways? Hey, you know what? I like that no one's really jumping in and saying yes. Because I agree with you. How about on a yearly basis? How many of you predicted this year that the markets are going to be up? Yeah, it is more information to predict based on fundamentals. I agree with you, Jim. Relying on predictions is not enough. You have to have criteria for taking some type of action. I agree with you. So again, I'm going to agree. And Mary, I know that you disagree, and I appreciate having a dissenting vote. But we're going to test you tomorrow. We're going to see if the S&P is up or down tomorrow. The answer is no. And as I was thinking, sometimes people have asked me, when are things going to go up? And let me be the first one to sit here. I don't know where the market will go on a daily, weekly, monthly, or yearly basis. And neither does anyone else. So there's your truth of the matter. 100%. In fact, you need to decide if you want to be right or profitable. It is simply that, ego or money. Agreed. I love it. I love it. Now, the short answer is that doesn't mean I don't spend a ton of time doing research, and I do make my best educated guess. Can't get that T button. And I trade stocks so I can use the long put to make up some downward movement so we don't get killed. There's no artificial intelligence that predicts the future. There's no algorithm, there's no person, there's no trading system, there's no adjusting. The fact of the matter is the odds are against us in the stock market. And we can't predict news, we can't predict wars, we can't predict presidencies, presidential actions. There's so much we cannot predict. And because there's so much that we can't predict, we're not able to tell you in the stock market what's happening or why. But we do have a system that'll make up some money on the way down. So I should just go this way, right? HI system to make up some money on the way down. We then will dollar cost average without asking you for more money. And here's the big one. And when the stock market returns, and for us, it should also be stocks, we make a exponential return because we've added 30, 40, 50% more shares of stock. That is the truth to what we have. In fact, I'm going to read a couple other of these just so you know. In TradingView, you can access many machine learning indicators. I checked many and don't feel it adds value to what I use. Kevin, I've used many different systems, and in all of them, I lost big until I was working with you in collar trading. David, I appreciate that one. Kevin, well, not saying Kevin, this one just says, there are some indicators that give you a better than average idea, but when I'm wrong, I seem to lose most of my portfolio. I'm not going to say who wrote that one in, but I agree. I agree. And for those of you that don't understand, and I'm going to single you out, Mary, one more time, and I apologize, but not really. And again, I know we've talked about it, so thank you in letting me use this. The comment was made, well, Kevin, in all due respect, it doesn't seem as bad as you said. The iShares for the 7 and 10-year Treasury bond, the IEF was down 26.40% through, well, wow, that's on a yearly basis. It's even worse if I'm looking up here. No, it's got to be from when that is, October of 2020. I don't know why they chose that. The TLT, right? The 20 plus year Treasury bond, that's down here at the bottom, was down 49.75%. And then the TLH, and I'm sorry, I don't know exactly what the TLH is, was down 44.12. But let me even put this into another understanding. How many of you are looking to purchase treasuries today with a 0.5% or a 1% yearly return for your coupon rate? Is there anyone here that's like, you know what? I am willing to purchase treasuries at a 0.5% or 1% coupon rate? Tell me yes or no. How many of you are willing to buy, give it a 1%? How many of you will buy a 20-year plus, a 10-year treasury, a 7 to 10-year treasury? How many of you will purchase that for a 1% return? So I see some nopes, not me's, no way, Jose. We're not that dumb. Bingo. Which means even though you might have a 10 to 20 year plus treasury that they say is down 50%, 44%, they're insolvent. They're insolvent. You're not going to get, no one's going to be that dumb. In fact, you know who's dumb? Warren Buffett. Warren Buffett purchases a lot of these because he's restricted in what he does. But Warren Buffett will buy some of these and hold on to them because he can borrow against them. It's a free leverage to borrow against them for him. It's 1%. He doesn't have to pay the huge. I mean, if anyone doesn't pay some of their loans, people don't like Trump for doing it, right? Buffett's one that would rather just say, hey, take the T-bills, and that's the leverage, that's what the collateral I put up for it, whatever. Mary, with all due respect, 60/40s last year lost at least 50% because the 40% was there. Excuse me, at least 40%, because the 40% that were in these things lost half their value or more, or they're insolvent. And the market was also down 19.86% last year. There are some portfolios last year that 40% that was in the bonds lost 35% of its value. Could they get some things back? Maybe. If they held on to it for a while, yes, they could. But this is what really happened. And they are insolvent. On paper, they still may be worth you know, they're $1,000 per bond. You can't trade them. If you needed that money today, you're waiting the 7 to 10 to 20 plus years to get your money back. The losses on a 30-year treasury bond hit 50%, and they're insolvent. You cannot trade it. That is the reality on the medium risk 60-40 long-term growth. That is why people should not be using some type of, or at least be paying for some type of financial plan. Not only is a financial plan based on a compounding interest of averages each year on a volatile market, it also counted on bonds being worth what they were worth and getting their discount. And people can't wait 30 years. They can't wait 10 years. They can't wait 20 plus years. So Maud just made a comment, which was going to my next thing. Maud just said, or my next point, not a thing. Maud just said, well, so banks hold a lot of them. Which equals to tons of paper losses. And I'm going to know BAC has 100 billion in paper losses. And people are worried that the interest income will be low for Bank of America. That's going to be the hit on them. If their interest income is low, even if they're making it up in other parts of their business, it doesn't matter. If it doesn't make it up in other parts of the business, it doesn't matter. They're going to get hit because paper losses is 100 billion, and they have low income for interest rate. Low interest rate income. Interest income will be low. So that's a knock on Bank of America. So don't banks hold a lot of them? Yes, they do. And should they have sold out of a lot of them, put them into junk bonds, sold them back over to China, created another bond fund meltdown like they did with the mortgage bonds? Yes, they should have. And regional banks are at risk because they have a harder time selling and packaging these bonds that aren't worth anything. But banks also can loan against them, which unfortunately you and I can't. Warren Buffett does, banks do, but you and I can't go get a loan against our treasuries. We don't have that same option, or if we do, it's at a much higher interest rate. I have yet to find a bank that will loan me money on my treasuries, let alone on gold, real gold or silver. So they won't take gold or silver. They're definitely not going to take a loan against us for treasuries. But they can still loan against that money because it's there or considered an equal cash dollar for dollar. The problem is that Bank of America has done some loans at a pretty low interest rate. The good news is Bank of America, though, isn't primarily in residential. They do some residential, but they're more commercial, small to medium business lending. That's where their bread and butter is. So if they beat tomorrow morning on their earnings, it's because they did better on small to medium business loans and structuring of money transfers for them. So that's the difference for them. It's pretty interesting. Those of you, I appreciate the emails out. Those of you know that my family lost a niece, a daughter, a cousin, and that put things into perspective for me again. That put things into perspective that, you know what, sometimes you don't need to be rushing through life. I can't predict the market. I can't make the market do what I want to, but I can protect myself in a system that when stocks come back, we make some exponential returns like we did in 2020, 2021. We do the best we can to minimize the downside losses. And we look really good for those of you that could afford Meta. That is one example of a stock that those that own Meta are like, boy, you nailed it at the top, you nailed it at the bottom. It's coming back up. It's 100% return. We have that opportunity with Ford. We have that opportunity with Under Armour. We have that opportunity with Baidu, Boeing. Let me take a peek. We have that opportunity with JP Morgan, Micron, Square, Visa, Verizon. There are those opportunities there. We don't have it with Apple. We don't have it with Google. We don't have it with JP Morgan. We don't have it with Meta because we already had it. Don't have it with Target. Don't have it with Tesla. Don't have it with Nvidia. Don't have it with Visa. Don't have it with Coke. Those didn't move down as much as the other ones. But that's what our system does. Unfortunately, the one question I can't answer for you, I don't know when it's going to happen. But for those that were with us through 2020 and 21, if you were there, if you started in 2019, you should like where your portfolios are at. We did have a problem with Boeing for some of you in that, so I need to put that disclaimer. If you were in Boeing, we probably did not have those exponential returns, but those are just thoughts for you guys to mull over on what we're doing and why. And the alternatives are not great. So short answer, as I'm looking back at the way things are going, as I took last week off, spent time with family, I like that we can be in a position then when things look their worst, we still have a way out and we still have a way to be wildly profitable sometime into the future. And that's the benefit of doing what we do. Now, the problem is, as you know, I had a boy that had a problem last year. So all of a sudden we started liquidating some of our positions at the worst time. You can't have things come back exponentially if you liquidate the positions and you spend the money. You can't have things come back exponentially if you're leaving that position. It doesn't work if you only do half of the process. So that is also something to keep in mind. I wish there would have been some other way for my family to deal with things, but we need the money to pay for bills and for medications. And so, I destroyed my portfolio. Last year with my son's accident, I lost my opportunity to come back in things because we needed the cash. Everything from liquidating IRAs to, yeah, I didn't have a choice, but you guys do. Okay, here we go. Let's get into something a little more positive. Big picture. Still a lot of complaints, but here's the question. Will we get back to that 2%? The 2% inflation, right? Because with that 2% inflation, we're going to get back down to mortgage rates that were under 5%, that, as I say, that we thought it was normal, that will get more people out of savings and into the market. That is going to be the question. And it's pretty funny because I also happen to have an article getting to 2% inflation will not be easy. And this is what will need to happen. It might not be pretty. So the short answer is, in theory, right? We know how both theories work, right? In theory, getting inflation closer to the reserve 2% target doesn't sound terribly difficult, but we're not there yet. And so the short answer is, if we're still at the CPI at 3.7 to 4.1%, the PPI was in that 7%. There's certain areas that are higher. We still need more rate hikes. If we are truly going to get to 2%, if you work your numbers, if we're truly going to get to 2%, we probably have another 3 to 3.5% interest rate hikes that we need to start doing. And obviously the stock market will not like another 3 to 3.5% of interest rate hikes. That is something that is unfathomable by our stock markets today. But that is the number. Somewhere between 3 and 3.5% is the number that we need to be at to minimize the inflation rate that we have right now. And it's just taking numbers against numbers. So the short answer is, another 3 to 3.5% of interest rate hikes will mathematically get our our inflation rate to the standard 2% that we want. And and Maud just says, I don't think we'll ever see a 2% again. Agreed. Let me take that back. We probably will, but the normal will now be between 2 and 3.5%. And we're probably going to see 3 to 3.5% for the rest of our lifetimes. Because again, if we did another 3 to 3.5% interest rates, that would all but shut down our economy because it would be too fast, too quickly. Earnings are coming up. We've got earning dates listed here. We will post those for this week. Bank of America comes out before the market opens, and we have Lockheed Martin before the market opens tomorrow. Protection is on. Zions Bank, if you're still trading Zions Bank, that is Wednesday. And Intuitive Surgical is on Thursday. In fact, I typed a lot of these in here. I probably should just go to skip my charts. Schwab was today, Johnson & Johnson, Goldman Sachs, United Airlines, Lockheed Martin, Bank of America on Tuesday. Wednesday, we have Abbott, First Horizon National, Morgan Stanley, U.S. Bank Corp, P&G, Procter & Gamble, Alcoa. So Wednesday is the technical start of the earnings season. Discover Financial Services, Kinder Morgan, Las Vegas Sands, Netflix, Zion. I forgot what SLA is. That might even be typed in wrong. Let's see if I did type it in wrong. It is typed in wrong. That should have a capital T. Tesla. Thursday, Alaska Airlines, American Airlines, AT&T. FCX is, the mining company. Freeport McMoran. Key Corp. PM is Philip Morris. UNP, CSX, Intuitive Surgical. Friday, we have, AXP is the credit card, is American Express. Last week of the financials in that 3-week financial run, and it's a little scary. Technically speaking, the Dow Jones is just turning bullish. and that happened today. Now at 52.42 above the dotted line there. CSX Industries, I don't know if that's railroad. I don't actively trade CSX, but CSX Corporation, it's a transportation railroad, correct? Transportation company, that's why I have it in there, but it is trucks, and it's a CSX is a very good transportation stock because it's all across the board, where it works with trucking, it works with railroads, it works with transportation, bulk commodities. It really is a great barometer on if our economy is clicking or not. CVX is Chevron, Bill. The S&P 500, it also just turned bullish as of today. And the NASDAQ has also just turned bullish today. I do have my parents in the corner here that are listening to this. If my parents could just keep it down just a little bit, that'd be helpful. If you hear them, they're in the background talking. World S&P end in October 2023. So as I'm looking at everything, I know we're up right now. I see us hitting the 50-day. I probably think we're coming back down. Even though we're up more than 1% right now, I'm sticking with my 1%. I just don't see us going above 1% right now. It just isn't there. Earnings this week, economic reports this week. Building permits and housing starts will be pretty interesting. Nothing else looks good. Retail doesn't look good. Housing doesn't look. Capacity, industrial production, building, business inventories, leading indicators, existing home sales, Philly Fed, Treasury budget. Nothing looks good. The Empire manufacturing number came in today. It's supposed to be a negative 4.0, came in at a negative 4.6. So it's not one of the better returns. Interesting article for you guys to read on bank earnings, industry report profitability. This is one where I believe it speaks of Bank of America in there, where they've got 100,000 in write-downs, paper losses. We're in the biggest treasury market bear market ever, says Bank of America. So here Bank of America is explaining how they're in the biggest, we're in the biggest bond bear market ever, but that's also because they didn't roll them up, and because in all honesty, they've got the $100 billion in paper losses right now that they have to contend with. And I guess that one, I've got it in here too for what's expected for banks, only because that was coming out. And here's where it says, actually, here's the Bank of America. The bank has piled into low yielding securities during the pandemic and has more than 100 billion in paper losses on bonds at mid-year. So again, they can trade against them, they can borrow against them, but they're not going to make interest income on them. Article about 2% inflation, definitely read through it. And my last article is Comcast and Disney focusing on the buyout of Hulu. They might have paid too much for it, but I do think the valuation is going to be higher than the minimum valuation of $27.5 billion. How are we trading right now? And for questions, we are basically protected through earnings. And on some stocks, we're going to be protected out of the money. And on some stocks, we're going to be protected in the money. But we did take some huge profits through September on a lot of positions that were down 10% or more. So with that said, what questions do you guys have? What questions do you have that I can answer for you? Are there any questions you have that I did not answer for you today? And Bill Brander, I'm probably going to need one more full day to get back to you on my research for your the stuff there. But I will talk to Kathy at any time. If Meta has good earnings, do you think the short call at 300 will be called out? Bill, that's kind of my hope, but probably not. What I'm really looking for is to see the bull call get above 50% and roll it into another bull call. That's what I'd be looking to do. So if Meta's good earnings, we're still too far in time for that 300. We may stay in it, especially if it's $50 above that short position. Maybe we're just going to get into a 325, 375, but I doubt it will be. I doubt it'll be called out. And I guess that was Russ Kramer that asked that. Bill asked, any idea if Baidu will badly affected by the prohibition on shipments of NVIDIA? So it's kind of funny because, Bill, let me ask you this way. If you've already got orders for $5 billion, are you not going to fulfill those orders? If you already have $5 billion in orders, would you not fulfill those orders? Depends on the prohibition on penalties. So NVIDIA is headquartered in Santa Clara, California. That is NVIDIA. How would I say this? What sold is sold. And if the government is going to block their sale of the chips, they will have to buy it up. So I don't think that NVIDIA will be affected at all. I think they'll get to fulfill their current orders. I think actually they'll get a bounce in orders so that if there are restrictions, it'll come and be grandfathered after those orders are in, and the federal government will have to pick up the slack. So I'm not worried about that at all. Maud made the comment. If the NVIDIA will, are you worried about Chinese Baidu? That's a one Chinese stock that we trade. Just when you think it's going to get going, it craps out. Yes, that is the ultimate way to talk about Baidu. It did it through a series of 4 earnings last time before it more than doubled. It actually tripled in value. And the only reason why, well, the only stock I would trade from China is Baidu. When people say, what about Alibaba, JD.com, blah, 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 blah. Yes, there are some other stocks, but the only one I would trade would be Baidu because it's in everything. And again, it might have good earnings, and all we're looking for it to do is get back up to that 155 range. We'll add protection back on. As it falls back down, I can now double up on protection, and so we'll make more money on the way down than it's losing. We'll just continue to play the system until it really takes off. Bill made the comment, depends on prohibition on penalties. Again, it's really un-American or uncapitalistic to see that happen. Maybe a Republican might win the election and maybe we'll be more pro-business again. I really don't know, but I'm not in NVIDIA. NVIDIA is overvalued right now. I would not be in NVIDIA. I probably actually wouldn't be in Eli Lilly either. It's also overvalued. but they both could have a little more upside movement to them. And that's basically, that's all you're talking about is, hey, more upside movement because of sentiment. All right, are there any other questions? If you don't have any other questions, thank you for being with me tonight. I think Keeve will have Thursday for you, and we're working on a trade. I hope this was helpful for you in getting a new type of look at the market and how things work. Mary, I'm going to hold you to it. If the market's not up tomorrow, then you're fired. Just kidding. Trying to poke a little fun at you, Mary. All right, guys. Hey, you guys have a good evening. Appreciate your time. Bill, again, I'll have the information to you tomorrow. I just ran out of time today. And guys, appreciate you being here tonight. Thank you very much. Look forward to seeing you next Monday. And until then, trade safely and have a good evening. Bye-bye.